Mess with the fire, now it's close losing in, nothing to bear and nothing to win, nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand, I'll take you higher than you've ever been, you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom. We go into the charts. So we got about 10 minutes for the weekly candle close, so we wanted to get a stochastic update before the close to see how it jitters after the close. So as it seems right now, we are closing out the candle at above the 618 level, between the 0.65 and the 618 of this diagonal pitch fan mean reversion path to the upside. And these daily resistance support levels, we are attempting to reclaim some of these as support in the false move Monday idea of putting in some newer highs. If we look at the weekly time frame, we are currently trying to close out a higher high on the weekly time frame. If you look at this, we are just slightly higher on the close of the candle than we were. We put in a higher high on the wick. Now can we close out the weekly with a higher high is the idea that's unfolding as we speak. So as we look at that, let's go into the liquidity, shall we? What is high block capital? Well, it's when people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters lie in wait or have been burnt to a crisp. So let's check it out. First, let's go into how the weekend has pinged in some liquidity or not. As it stands right now, there is currently little baby pools of short liquidity getting pinged in without any longs being interested as of late, except back here yesterday. And yeah, we've previously saw over the weekend we saw some short liquidity get pinged in, and they said no way Jose, and they came back and grabbed these guys on Saturday, and then they've been slowly bleeding into these $507 million pools. So this $507 million pool is still on the table down here at 30,175. I suspect once they close out the weekly candle that they'll come and get this character without hesitation. I may be wrong, but we are imbalanced to 20 billion, but we're forgetting a lot of these characters to father time here as they enter into the 7-day, which means we need to expand our vision to that higher time frame pool in a minute. As it stands right now, the thickest band down below is at 29,211. So coming down to 29,211 to grab this pool of 50x characters that are stacked up quite nicely would be an ideal situation to unfold. While we do have some pools up here in shorts, they have basically wrecked the shorts on the external liquidity range as well. So they could come back and absorb some of these 50x longs to at least make a sustainable move if they decide to continue. So with that in mind, let's expand our vision to the higher time frame pools of the 7-day and beyond. Shout out to everyone here. Thank you, Dingo. Shout out to everyone here. So in the immediate 12-hour, they've pinged in more shorts to longs in that 12-hour time frame. Doesn't really mean anything to me, that's why I skip it always. If we look at the 7-day, we are having a little bit thicker bands down below than above. We have a thicker liquidity band down here than we do up here. The thickest band of shorts is up at the 31,750 region. If we were going to break the highs, that would be where they would lie in wait. As it stands right now, you have a bunch of those people lost to father time resting below, though. A good $30 billion plus waiting down below, down into the 27K region on the 7-day time frame. Imbalance is to the downside on the 7-day. Let's take a look at the monthly. The monthly currently rocked. We saw this 28K inbound play. We did not expect such a beautiful play, but when you're there for it in a long, then you just take it as it comes and pleasantly get surprised to the upside. So are we going to see this continuation up to the pools up in the 31.7 region with the double digits here, a $30 billion pool up there on the monthly time frame and above, which could suggest you come up there. You do have nothing indicating to gap up to that region just yet. If we look immediately below here, you have 4.5 billion down at 30,001. That could be a nice little liquidity grab down here. You even got some double digits down here. It starts to taper at 30K even, but the 29.5 region does have that nice $6 billion that they could come back into. It'd be nice to see a little bit of a retrace to knock out at least the consolidated longs from here and here before going higher. As it stands right now, if you look down below in the nether regions of 24.6 and below, you do have more liquidity down there, but that is a mighty big Bart Simpson to the downside if that did occur. Not really thinking that myself, but anything is possible. If you look at that on the 3-month as well, you do have 74 billion down at 24.2. Currently a thicker, hot liquidity pool on the 3-month than in the upper regions. We previously did take out that 67 billion at 31.2 on the 3-month time frame, and we do have 41 billion and 56 billion and more residing at 32K and beyond, all the way up to the regions of 34K. So the narrative to continue is paved by liquidity if it's so inclined to do so. If you look to the lower time frames, of course, there's not that much because it was previously taken out, but newly installed liquidity on the longs, there's $8 billion down at 29.6, 13 billion at 29 even, 14 billion at 27.2. Other than that, yeah, coming down to that 29K region, getting this fair value gap / liquidity pool could be a juicy re-entry model if it does present itself. Let's go into the 6 month. You start to see those pools on the downside getting ever so thicker, suggesting that is it going to be sustainable after the liquidity grab on these shorts? Are we going to continue higher? The imbalance on the 6 month is to come back down to here and stab this with the fury. Basically on the 6 month time frame, it starts to allude to this pool being not as juicy as it could. Do they spawn some divergence at 32.1, some bearish divergence, and start to make their way back down into here? That is a question to note. Some people talking about trying to hold that 30K support. We do have to SR flip it if we want to make our way to 36K and beyond. Is the path to 36K and beyond paved nicely? If you go to the 2-year time frame where you can get these pools from June and May of last year, then you can start to see that there is a path paved up in that region. You got 159 billion up at 32.4, 139 at 32.8, 127 billion at 33.2. So this entire region is ripe for the picking on the external liquidity range. So are we going to come up into this region to take out some of these pools? The narrative does suggest continuation based off of where we're currently at within the price action model. If you look at what's below, the hottest region now is at 24.4, and you do have a comparable amount at 23.6 and below. So it would need to start retracing back into this gap and go lower for us to think that that continuation idea is negated, and we'd have to start losing those support structures that we are trying to reclaim on the daily time frame. But the path to the upside is paved up to 34.8 with $103 billion. It starts to taper by half at 35. So I suggest if we do come up, there will be more pinged in the path to 36K, which does have 73 billion up there, is available now, which was previously unavailable back in April when people were talking about 40K and beyond and gapping up to those regions. It takes time to ping in the liquidity, which is now pinged in. So what does it all mean? What is it all alluding to? Well, let's go into the momentum and the fibs and see where we can draw a conclusion. Let's take a look. So the weekly candle closed just now, a moment ago in time, and now we have some stochastic update to the upside here, some curvature path on the Williams as well, a vector candle also saying that we had a repricing algorithmic model of volume, which was 200% of the previous 10 candles combined. So a significant amount of volume was used to push this price up. So let's go see what the reclamation of this on the candle close of the weekly entails, and putting in a higher high on the weekly. All right, so let's go into the Binance chart with. So we were previously looking at this impulse retrace idea for the weekly time frame, the 236 of 27,520, and reaching up into these regions. This is why we were talking about the 36K idea coming up on the weekly time frame would suggest coming up into these regions if this bullish play were underway. We previously deleted the daily one because it fulfilled itself and more, so we can start to think about what is coming in terms of fibs on lower time frames. The weekly had that hidden bullish divergence, which triggered a stop loss hunt, and we were out of here. So let's go how the 5-day Oh, let's start to throw on our oscillators too. Heads up display was on from the beginning, sorry about that. Well, so basically, link in the description for more momentummaster.info. You can toggle this at your leisure, see all the components, read about each one as we go over them. And so on the 5-day time frame, we started to see this oversold status. As we were coming down to here, we were talking about the insinuation of the angles changing on the Williams for this to come up and getting that subtle support from the higher time frame. We were reaching the outskirts of the cloud here on the 5-day, and that's where we started to see the bounce. We were holding this super trend all the way back since January 11th. It's been holding quite strong, and this cloud also insinuating the strength of the trend to the upside. If we go to the 3-day time frame, we started to lose that 3-day, and we were maintaining this weighted moving average, and we were talking about the money flow coming beneath the RSI and talking about that deviation and how that deviation will gravitate yourself back towards the RSI, which it did. And we saw that fertile crescent of the double bottom on the Williams with that green oversold status, and we were saying that would be a juicy place to look for potentially coming back into the fray. We did break that super trend on the 3-day ever so slight, but we started to reclaim it after breaking the bearish one that appeared. But the level in which it was alluding to with that dynamic support and resistance was pretty spot on. A little bit off, but pretty spot on the 3-day. We're starting to get overbought on the 3-day stochastic RSI. The Williams still has some room to push it up further if it so decides. If we go to the daily time frame, the daily time frame is getting overbought. We were talking about how this yesterday, how this average needs to come up a little bit more for a dramatic potential of reversal on the daily could ensue. Similar to here, it would have to come up to a point where when it crosses over the average, it creates an alarm based on back testable levels, and those are where you start to see some reversal events. Okay, do you get sharp reversals here? You could, but ideally you'd be consolidating while this comes up more. What do I mean by that? Well, if we go to the 22-hour, we went over that idea, it would look similar to this, where it starts to reach the precipice of this and starts to give the cross down event. This is why we like the 22, because it starts to front run the daily and give you some ideas before the daily starts to show them. So this is what I'm talking about in terms of overbought status on the 22-hour and the 12. You're starting to get some suppression events starting to potentially occur for any long idea. So what we would like to see is a healthy retrace to reset some of these higher time frame / medium time frame ideas personally. So seeing this cross down event locked in with the money flow above the RSI and this starting to come down with the MACD crossing down, you could be seeing some sort of reset of the 22 here with the cross down event. I see nothing bullish about this scenario per se. Okay, where was the last time we had something like that? Well, in this level of blue, we had that kind of back here. We did have a cross down event, but then when we played out the stochastic and we reset the stochastic and didn't give back much, then that's when you could reposition back into a long. I remember putting out the, when was this? Yeah, that was back there. So I remember putting out the 10-minute bullish divergent, hidden bullish divergence, and this idea out of here, if I do recall myself. So it doesn't mean you'll get a complete reset, but having that cross down event can give you a smooth amount of 5% or something, necessarily speaking. And then you started getting bearish divergence, and then eventually started to retrace. Okay, so are we going to see a stab up? This is false move Monday, so you start to look for where these fatigue points may be. Let's go ahead and go down into the 12-hour. The 12-hour time frame also starting to come down here with this average coming up here. Where was that curvature on the cloud? This got changed, I believe. Was that on the 22? No, I think it was the 6-hour. We'll get there in a minute. So All right, so we got the 12-hour cross down event locked into here with this 12-hour candle. So this, I believe, unless this goes way up above this and starts to cause this thin boy to not be at this angle, then this is pretty much set in stone, although this 12-hour candle could go either way in confirmation of this cross down event on the 12-hour. The 12-hour is above the Keltner channel, so it's realistically coming back into this Keltner channel as you do on other time frames is what you would ideally like to see. You're starting to see a waning potential of the volume here on the volume weighted moving average cloud here, the trend cloud. So is this going to suggest that we come back in to test this super trend shift area on the 12-hour? Definitely overbought on multiple indicators here, on your momentum indicators, the money flow, the RSI, the stochastic RSI, the Williams. The volume is tapering off here as well as your rising price. Rising price with falling volume indicates a potential disinterest in the level we're at, so we could see a sell-off to a more interesting level. You don't generally long into premium levels, you sell into premium levels, so this is kind of one idea to think about. Also, we previously saw 6-hour time frame shift. We're seeing this bearish divergence start to play out on the 6-hour time frame on this reset here of the bearish divergence in the stochastic. The Williams is just starting to open up here and has yet to reset completely. So this is why we were talking about the potential suppression of the 6-hour, because the Williams gives you that indication of whether the stochastic is ready for takeoff yet or not. So when you get the stochastic in a level here with the Williams in the Fertile Crescent tidal basin region, particularly with the double bottom, then you're more poised to see a bounce. Does that mean we will not see a short squeeze? No, nothing is guaranteed. There could be another leg up before we go down. This is False Move Monday. Always be careful of what is going on Mondays. The start of the week pings the region. They ping the highs and the lows to get your psychological high and low. Shout out to Tino from Traders Reality for that information. Yeah, if you go to the 4-hour time frame, the money flow is significantly bleeding out below the RSI, which suggests it could come up to it again. The Williams is also resetting in a manner here, which was causing this suppression to the stochastic RSI. You had some previous hidden bullish divergence on the money flow here, which did kind of played out ever so slightly if we look at this. So it did play out after that crystal here. You saw a 2% bounce from that hidden bullish, but generally you're also getting that cross down event still in play, the baseline still suppressing the price nicely. So you have a 4-hour cross down event, a 6-hour cross down event, and I believe you have the 12. Yeah, the 12 we just went over, starting to flirt with the idea. And you're also getting that flirtation on the 22. 22 also locked in a cross down event. So you have a 4, 6, I believe you have an 8 too. The 8 locked in yesterday. Yeah, so you have a 4, 6, 8, 12, 22-hour cross down potential suppression of price to the downside here. So be wary, this is at a premium level for longing. This is where you would be looking to see some vector recovery here and come back and retrace back in. If you were going to retrace, where would be a healthy retrace zone? Well, here's where you can pull a retracement tool from impulse to impulse, and you can set it to the basic. If you start breaking this 236 at 29,837, then coming down to the 28,863 region would be not out of the cards, and then finding a 0.5 equilibrium level at the 28K region, and then even below at the 618 bounce at 27,289. So a healthy retracement would be down into these regions and bouncing off the 618. Now, did this happen before when we had a healthy level? Yes, it did. Back here, same concept. Here I just turned off the levels. So you have the 236 entry model, boom, you bounce down into the 618, and we were out of there. So that's your ideal entry for a long, if you're being honest with yourself, because you don't want to buy long into a premium level and just get slammed in the face. It happens more often than not. So looking at I put that as pocket settings, and it went into the pocket and bounced out of here. So if we were going to see a decent long from here, it would to be coming back to the 618 and bouncing out. If we're being honest with ourselves, that would be what you would want to see for a healthy long. Anything else could just be a trap to bring you to the lower nether regions. Is there liquidity suggesting that zone at 27,289? Let's go take a look and make sure. 27,289, 27,289, 27,2. There's not that much here on the monthly time frame because they previously took it all out. So is that going to be pinged in as they go? So when they change a narrative into believing bullish things, they start to get people to pave the way, and more longs enter than shorts on the way down too. So it's all about how much they scare one side out to justify moving the other. So this is why we were looking at this yesterday, that these shorts were still here at $310 million. They were still feeling conviction in their shorts until they got banged out here, and then there's less conviction in value. In terms of value, there's 1/3 the conviction here for the same idea. And so as you see less shorts entering, then when there's still longs open with conviction, there's no reason why they can't come back to get the longs now. Hopefully that makes sense. It's a kind of counterintuitive play because the longs conviction end up wrecking them, and the short conviction ends up wrecking them as well. So wrecking themselves as well. So if there's less conviction for the shorts, more likely the shorts playing out. If there's less conviction for the longs, more likely the longs play out. Which is why fear and greed is a thing, and why it works in the favor opposite of what you're feeling. So as we're feeling greed, and the greed level's at 60 right now. Let me check my Discord. I do have a bot that does talk about it. It's at 55. It just was previously at 60 something, so it went -9 since yesterday. So that is that. Shout out to anyone in the Momentum Master Discord. You do have these price bots that do tell you some nice levels. So yeah, we went down a little bit in the greed level, but still doesn't really, we haven't gone into some decent fear just yet, so not a real good idea to long. Coming back into this 30,175 region, I'd be surprised if they do not at least take out this guy and come down to their partners in crime down here at 29,222. I previously pulled up a 222 guy before. There we go, just to keep it even. 29,222 would be a decent level, and we already have that stuff marked off here. So as I'm seeing all of those cross down events, last night we had in the Discord, we were putting out this cross down event. Since we said it's cross down flirtation here, there's been a 0.65 drop, but you realistically had some 1.43% from that. So these cross down events are not to be ignored. Cross up or cross down, it doesn't matter. When you see these leading moving average formulas do their thing on the baselines, they're your first signs of reversal for sure. So it's not to be ignored. So when you see these on the 4, 6, 8, 12 and 22 and beyond, that's when you start to wonder, is this going to go higher really, or is it going to start to retrace into some of the liquidity? Okay, so let's go into the hourly attempting to get bought back here. You are in the oversold region of the Williams, the leading MACD attempting to come back up here. You're starting to get the money flow to come back above the RSI, meeting with some the stochastic meeting with some resistance on that idea. Is it going to get, so the hourly attempting to stave off some reset here. Looks like a B, C to continue lower, on that hourly time frame. If we go see the 15-minute here, the Asian range did have a previous sell-off candle trying to reset the 15-minute. We are getting some resistance on this cloud as we attempt to break beyond it. So this getting some bearish divergence that played out here. Williams at an ambiguous place to see anything of note. 5-minute money flow came beneath the RSI and starting to come back up here, but this is the 5-minute time frame. So we're seeing the Asian range after the candle close. We saw this push up before the candle close and then dumped off into that close. All right, so we talked about this curvature of the cloud here on some time frame. Let's try to find out what time frame that was. I think it was the 6 hour. The 6 hour, yeah, and then it got a little bit more surge up from there, so this angle got negated. But overall, the angle is kind of suggesting that it's not in the same upwards path, but it could continue at that higher level. If you go to the 4 hour here, 4 hour also starting to taper in a manner here. Still quite thick though, so you could come back into this, find some support on the super trend level, and maybe get another bounce up out of here. This would put you at that one level at the 29,410 region. If you wick into that cloud and start to see some support, you could get a bounce out of that region. Let's see if there's anything indicating something there at that level at 29.6-ish. Well, this entire region has like 50x and 25x from these candles out, and then the previous stacked region from this little bit of happiness up here brings you down below that at the 29.4 and below. Still, the thickest region in this immediate location is down in the 29.222, as we pointed out before. So 29.222 would put you about there at the bottom of the cloud on the 4 hour. All right, so I think we got an idea here for where the cross down events and everything are occurring. You got a shoulder, head, possible shoulder, I don't know. It is an ascending channel. If you do this, you'll see it's kind of ascending. So if we continue on that path, finding that bounce or bearishly retesting out of here, personally looking for that to retrace. We did break the super trend on the hourly, which was holding since Tuesday. So we wicked off it here on Thursday, wicked off it again on Sunday, and now we've broken it. So the super trend, which is a back testable level here, is kind of broken on the hourly. Did get broken here before we continued, and we did point out the hidden bullish divergence here, or on the money flow. So it didn't matter that we broke it. We did point out the hidden bullish or the regular bullish on the money flow there for that continuation. So are we looking for the hourly play? The hourly is attempting to fulfill itself alongside the 15 and meeting with huge resistance on that idea as of this moment in time. All right, let's look at the DXY, see what's up with that. We're pointing out the DXY getting overbought and needing to retrace down into these regions. It looks like it did meet with what we were talking about. Are we going to continue down that path to the downside for the DXY? It doesn't seem the correlation is exactly 1-to-1 for when the DXY goes up and Bitcoin goes down, and it goes down and Bitcoin goes up. You know, they both basically pumped together the other day, so that was kind of interesting. But this bearish trend-based fib level has been holding true. We've wicked off the one, region to continue to the downside here. Are we going to come back into the 1382 level and come down into the 1618? It's possible to continue because the 4-hour time frame is overbought and coming down, just getting started. Williams also overbought on the DXY. Have yet to see the cross down events occur on these other time frames. The momentum is still wide here on the baseline cross downs on these higher time frames. It's not the same as BTC. So coming to this level and potentially bouncing like this, potentially coming down and bouncing off the 1382, it could be a possibility. You do have the cross up event on the 12-hour as opposed to BTC, so the idea of the DXY bouncing at some stage is more likely on these higher time frames than BTC is, just in terms of being oversold. The 12-hour is overbought here, but the Williams just getting started. Could be that suppression event to continue. If we go to the S&P, the S&P previously gapped up, didn't come back to these gaps from April 2022 just yet. Starting a cross down event on the 12-hour similar to Bitcoin, so we could be coming back and retracing. You are resetting the 12-hour. The futures still looking to, oh, this is a June one. I need to update this to the newest one. Hold on. I think it's ESU. There we go. And then we need to add this to my chart. Sorry about that. Pardon me, just one moment. I had the old contract up for the ES. There we go. Delete this. Alright, so we've basically retraced down already, so the S&P is going to gap down when it opens by the looks of it. I mean, a lot could happen in the Asian session, but you could double top up here and not really gap at all. But as of the weekend open, it's kind of sold off here for the S&P, coinciding with this cross down on the 12-hour, coming back to kiss the cloud or the ATR here, which has held for some time since March 30th. It has been holding even when we gap down here. We have seen this hold. So are we going to hold the super trend here at 42.89 as we reset on this level? The NQ, let's go to the regular NQ. NASDAQ futures. So the NASDAQ also crossing down on the 12-hour. You're seeing the suppression of sell-off profit taking as we saw a beautiful run up from April all the way to June, basically straight upside with, sideways like ascending channel consolidation. Getting a daily cross down on the NASDAQ, so we could be seeing some sort of larger take profit pullback as we reset some of these higher time frames on the 3-day and the weekly for the NASDAQ. Cloud is still holding in this very healthy manner. We did see some bounces off the daily time frame on the cloud. We're currently getting bounces off of the Keltner channel, which is an ATR based Bollinger Band strategy, but as you reach the outskirts of this, you're reaching into uncomfortable unknown territory, coming back into the known of these clouds and whatnot could be in order, and then you got a shoulder, head, and possible shoulder forming for a larger scale swing pullback possibly on the table. If you go to the weekly time frame, we have been putting up that uptrend. We broke the bearish trend, which was back from January 2022, and we've broken that, so we are now seeing this uptrend on the weekly time frame with the ATR and the cloud and the baselines and these weighted moving averages and adaptive moving averages now as support. You have these support structures to look forward to, and if you come back down into the cloud for the weekly, could you see a continuation here? If we go in similar fashion, let's just check out some fibs here on the NQ. So we're currently coming up to the Hail Mary of the 1618 at 15,330, and we wicked off that region and started to come back down. Are we going to continue up to the 16K of the outskirts of this bullish trend based fib level, or come back in for support at the 1382 at 14,805, and then start to get some order blocks filled and head back up in that region? If a healthier play would be to come down a little bit before you go up, but I'm not going to be married to the idea because I scalp in the quantum realm of the 1 minute and below, so it doesn't really matter to me. But this is just looking at a market update in general for what is possibly in store for the future. DXY on the weekly also had this previous, what is that, cross up, and then we're meandering around, shoulder, head, and possible shoulder out to break the bear trend for this. We have a lot to go before that occurs. Yeah, so is this coming down to bounce out is the question. If we go to the daily time frame, so are we going to come down and bounce out from here? We have the daily, 3-day, weekly possibly in our favor. The only thing against us is the 4-hour. So this 4-hour reset of the dollar could bring us some upside after that point. The 12-hour though is also overbought. So this overbought 12-hour expresses fatigue because we essentially went sideways without breaking the range. So coming back down off here, does the Williams momentum stave off a 4-hour dump and then bring us out of there for the dollar? Who knows? Let's go look into total real quick, see how the total is doing. Total is also flirting with the idea of a cross down event similar to Bitcoin in terms of a fatigue on upside plays and a potential retracement idea. We previously came into the pools we were talking about for the bearish trend-based fib levels that we had back for you from April 25th. So we're going to clear those out and start anew. Boom, all done, projections complete. So we're going to take a look at what could be occurring. So the same thing could be inbound for the total market cap of crypto as is for Bitcoin, which is the potential fatigue point of the 12-hour. Has yet to cross down, but it's giving it's alluding to that by having the price be beneath the baselines, similar to when the price is above the baselines and it crosses up, you get this move. You get the similar idea when it crosses down. Okay, so this is just giving you an indication of what may be in store. There is no guarantees. Once again, it's up to you to make decisions. We could be flipping the daily adaptive moving average here, which is interesting to note. The adaptive moving average, which is a highly sensitive yet stable adaptive moving average, the trend-based adaptive moving average. So this is coming down to possibly reclaim that on the daily time frame, already having the weighted moving average in its favor here on the daily time frame. Previously breaking that April 22nd super trend level and now putting in a newer idea for that. If we go to the weekly is still crossing down similar to Bitcoin, but we are putting some new candles up above the baseline, suggesting that the trend could be over. We got a previous kiss off of the cloud, which we like to see. That cloud kiss is the confirmation idea, which is what happened here. We got a cloud kiss continuation, cloud kiss continuation. These cloud kisses do give you the indication of continuing higher. We still have not yet broken this larger time frame bull trend to the upside. The cloud is still healthy in its path, ever so slight to the upside here. And are we going to make our way up into that region? If we use the trend-based fibs for total here, we can do the impulse retrace just from here, and the 236, which we held at 959 billion, we held that, so we are now up at the 786 level. Resistance levels for that, we previously went into the 1, got rejected, now we're coming back to the 786. Possible consolidation ideas within this region before making our way up into this for real, up to the 1.36 level. And then you got some vectors over here that could be reclaimed up in this region at $1.452 trillion. If we go into how the altcoins have been behaving, the altcoins have not been getting the same level of interest due to all of the exchange FUD and just dishonesty and disingenuous characters in the space. So they've been looked at as more sham-like and slot machine-like than before, with less integrity, I would say. So I'm not so interested in altcoins, so I would say the majority feel the same way, unless you're just gamblers for the most part. But yeah, I mean, they do have pops here and there, but overall the interest has still not broken the bear trend. We're still kind of in this zone for bearishness for the alts. There's just nothing really interesting about the space that I've seen yet that brings anyone into it. You know, Pepe and Ben coin are not really coin projects worth putting your money in my humble opinion. But all right, so if you look at the daily, we're also getting rejected off the cloud. Could we be seeing a stab up out of the cloud to reclaim it, to get out of this? We have daily time frames overbought now with resistance at the cloud. That's generally when you start to come down some more. Maybe people seeing that the altcoins not getting so much love, they'll start to reconsider. Maybe they'll start to retrace alongside Bitcoin and come down here. The cloud crossover event, or the baseline crossover event, is still holding the baseline, so you still have that in your favor for total 3, which is the altcoins. You are still seeing the momentum come up here for the what's it called, the Williams here, so you could still see this suppression continue. You do have the 4-hour in your favor here. We previously had, looks like the nukes locked in, and then it dumped out of here. So these nukes do have you at hello a lot of the time when they close in on these higher time frames like this. Very interesting. I didn't even look at it. What are these nukes, by the way? These are your stochastic array, a never before seen formula, simultaneously monitoring more than 7 time frames of information, considering over 32 different indicator values across 7 time frames of information. More than the human mind can carry in its brain, so worth thinking about. So we're holding this super trend level as we make our way up with the altcoins ever so slight, despite not having as much interest as BTC. People are repositioning, by the looks of it, into their altcoins of favorite, like Matic and XLM, and as they get recognized as currencies by the Fed and all that stuff. Maybe this could see some sort of bounce here after try to break through that cloud, pierce through up into these fair value gap regions up here, try to come up into 336 billion, get another like 10 billion injected in at some point perhaps. As people take their profits from Bitcoin, maybe they inject them a little bit into their favorite alts. Let's look at the Bitcoin dominance. Is it looking to retrace a little bit? If the dominance is looking to this fulfilled our projection pretty nicely, I'd say, right up to that level. Very nice, very nice. So we can delete it now. And so are we going to retrace back into some, we're getting the same indication of the Bitcoin dominance kind of dropping off here. If people start to take profits on their dominance and it starts to drop, like let's say this starts to drop, but then you have the USDT, which also fulfilled our projection. If the USDT dominance starts to rise, then that could suggest people getting kicked out of their Bitcoin trade into USDT. Now, if the USDT also considers to keep going lower alongside the BTC dominance, then maybe they are going into their alts instead of USDT. So are we going lower on the 4-hour time frame? It suggests we're overbought and not going anywhere on the USDT dominance, so we could be coming down for another leg reset of the 4-hour time frame. For a triple bottom event, starting to round out the cloud a little bit, still thick, but if you come back for this, we've been holding this 4-hour super trend since back here in June 6th. So this 4-hour super trend for the Bitcoin dominance is still holding until you can break that 51%, 51.36 level. We are still strong as can be, over 50% for Bitcoin dominance. As we've said, the altcoins just aren't bringing the fire as much as Bitcoin, as exchanges sell off their BNB and whatnot into Bitcoin, which is a more guaranteed decentralized path for profit. We are currently on this bullish trend-based fib level of continuing possibly even higher. Well, let's go back to Bitcoin and just see how things have been in the last 30 minutes since the close. We did a long stream for you. We're going to stream most likely before New York tonight. Let's take a look. Daily time frame baseline also above the price here, starting to suggest potential fatigue here on Bitcoin. I'm going to change this over to the pocket so I'm not getting so many lines up here. Pocket. Boop. So let's go ahead and recap. So the daily time frame baseline is starting to appear above the price action, suggesting a slight fatigue on the daily time frame. You're already getting a cross down event on the 22-hour, which is also locked and loaded and showing you potential cross down event inbound, which could bring a little bit of percent to the downside. We talked about what that percent might be at a conservative value down at the 29.222 region, and then coming back healthily to the 27.289 region for a 618 bounce for a larger play if it is going to retrace below these levels. And going to the 12-hour, you're also getting the cross down flirtation event. It needs to close this in 11 hours at a level below this level in order for this to lock in place. If it starts to surge up here and close above here, it negates that idea entirely, but this is why they are leading moving averages. They try to lead the idea before the idea happens, and most times they're right. So the 8-hour is also gave you that leading idea back in Saturday, and we've been seeing downside ever since and the suppression on these baselines. So is this 8, 12, 22 and also the 6 now locked and loaded going to give you this suppression idea to a retrace on BTC? The liquidity could suggest that on the 1-minute time frame. The higher time frame does suggest though that we do have some liquidity up above. Let's go remind you about that and then we will bid you adieu. So the stuff that is above is at 32.1. We have 97 billion on the 6-month time frame. If you go to the 2-year time frame, you do have a large amount there as well. You have 159 billion dollars at 32.4, 139 at 32.8. But remember, just as they left some alone here, they left some alone at 24.4 and below. They do not always clear the zone before they shift out. We've made that clear when they said, was this enough divergence for them to spawn to the upside? And they did. Well, is this enough liquidity for them before they start to retrace? It's up to them. I don't understand the inner workings of the market maker just yet, but we're getting closer day by day. So if you start to see how this, where do they start to fatigue on the liquidity of the squeeze shorts? That is the question. When do they start to retrace onto the 50x and 25x players? They're paying way too much. That is also the question. So as the cloud starts to curve in a manner here, coming back to that super trend level here on the 4-hour time frame at that 29.6 region, and possibly to the 29.222 for that liquidity zone we talked about here. Coming back into that thick band here could be an idea here. Let's ping this one last time and see what type of short interest was spawned. So far nothing was spawned. Maybe you got some shorts opened up here, 50x into that drop there, and so they're starting to possibly come back to grab this 42, 36 and 46 million dollar character. You haven't seen any interest in longs just yet, only shorts opening up as we drop. Small little baby pools in the Asian session, also the weekend for most of the rest of the world. And that's about it. So we would like to see a retrace based off of the cross down events suggesting suppression of price, and that suppression would start to indicate itself on the hourly time frame suppression, which we are starting to see this getting overbought. Yet we have not really gone anywhere just yet, just sideways action while this is getting overbought. So but be careful as you trade in Monday. Remember, it's false move Monday leading into the week, trying to establish new highs and new lows for that psychological high-low level, and then they spin out from that region. 15-minute trying to look to bounce here above the cloud by the looks of it, could be coming up to that liquidity up in these regions. So they're coming up most likely to come grab a pool of shorts, perhaps another 50x pool at 30,789, and then fatigue off that pool down into these guys on the longer term play. So that's my story, and I'm sticking to it, folks. Let's go check out the live stream, see if you have any requests before I bid you adieu on Bencoin. Going in all in Leroy Jenkins style on Bencoin. What's up, Dominique? How's it going? Well, if you have nothing to request, somebody asked about XLM yesterday, so let's go give that a whirl. So there is the case with XLM. XLM is Stellar, right? That's what? That's not XRP. That's Stellar is oh man, I can't remember for the life of me, but I remember putting in $1,000 back in the day, but it's one of those things like 𝗥𝗲𝗿. It's one of those currency type coins. Also trying to reclaim the range. It had a healthy move to the upside, coming up to the range that it was at, coming back into slight retrace zone. You got the daily overbought here. The lower time frames oversold, possibly trying to break out of this range with that lower time frame push beyond that region. If you look at the curvature here, it's doing pretty much the same thing. Has not yet put in the entire high, so coming back up, maybe pushing to that level at the range high and then coming back to it. You had that nice rocket ship on the 4-hour print perfectly. Shout out to whoever pointed that out. You had that bullish divergence on the RSI too, smooth bullish divergence, and then you had the rocket ship print with the oversold multiple time frames. Boom. That was back in Friday, June 15th. So seeing a retrace idea, it does look healthy with that ascending channel vibe, but you could come back a little bit on the daily time frame for a retrace idea, and then reposition based off the interest that was generated there, possibly off the cloud on the daily time frame, since the daily time frame is the one that's overbought now. So kind of waiting for that level to come back. Your R5 time frames oversold, most likely the higher time frames based off the X here. So yeah, it could come back down into this region. The cloud is starting to shift, so at any point in this path you could find a level to look for. If you want to be frugal on this, you could even take it from the first retrace zone here. Boop. like that. All right. Well, guys, you got an extra little bit of time for me. Hopefully it was worth your time, and we will catch you on the flip side. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the precision, the accuracy, and all that fun stuff. And we will catch you